dynamic regions like the Philippines and the broader Asia Pacific. Now today we are joined by William Matthew Cabangon, the president of AAA Equities, to explore which asset classes are currently most profitable and where the best opportunities lie for the remainder of 2024 and into 2025. Will, good morning and thank you for joining us today.
Hi Anne, thanks for having me on the show. It's my pleasure to be here.
Now, to set the stage, can you tell us about AAA Equities and its position in the Philippine financial market? How has the company's approach evolved in response to emerging trends?
Yes, absolutely. So we at AAA Equities, we are a stock brokerage that is primarily focused on the online retail investor. We saw a trend in the Philippine market that people are more digitally savvy, that people are looking for investments, particularly easy, convenient ways to invest. And we saw that trend and decided to ride with it. Our goal is to make investing in Philippine stocks more accessible, more easy, and overall a more pleasant experience for the individual investor. And looking forward, we plan to introduce even more features to our online trading platform that will improve the investing experience for the everyday Filipino.
Will, with several companies going public and new market entrants making waves in the Philippine financial sector, how do you see this trend developing? And what are the factors that are, driving these IPOs and new offerings, and which sectors hold the most promise?
So actually, 2024 has been a pretty slow year for IPOs. If I'm not mistaken, I think there have been about 3 or 4 IPOs only, which historically has been very low, and that's really attributable to high interest rates and low valuations for stocks. Because when you are a company that is considering whether to go public and sell your shares, you obviously want to sell those shares at a high valuation. So, market timing is very important. Mm-hmm. And given that stocks this year have been trading cheap, it hasn't been a very attractive time for companies to go public. And there are a number of big ticket names, companies like Prime Infra, like GCash, for example, like the SM Group's REIT. Those 3 companies have, in some form or fashion, mentioned that they are, either delaying their IPO or having second thoughts about it altogether. And, I think looking forward to 2025, with rates coming down, with stock prices going up, I think we should start seeing a lot of these companies, both big and small, coming back to the IPO marketplace. And I do expect way more listings next year compared to the limited number that we saw this year.
Right. Now, Will, as inflation and geopolitical risks continue to impact global markets, how should investors weigh the risks and rewards of traditional assets like bonds and equities versus newer asset classes such as cryptocurrencies?
So those 3 asset classes, bonds, stocks, and cryptocurrencies, those are 3 very different risk profiles, and each of those 3 actually sit in different places across your risk and reward spectrum. On one hand, on one side, you have your very conservative side, and that's where bonds sit. You're not going to earn that much money on bonds. You're going to earn your yearly interest, but you're not going to lose a lot of money either in case times get tough. That's why they call it fixed income. On the other hand, the other end of that spectrum, of that risk spectrum, you have cryptocurrencies. There are stories, of course, of some of these tokens, going 3x, 4x, even 10x. But there's, even more stories of tokens going to 0 or down 99.99%. Mm-hmm. And somewhere in the middle between those 2, the ultra safe and the ultra aggressive, are stocks. And it really depends on which stocks you're picking. Some stocks sit closer towards the aggressive side. Others like blue chips, like REITs, they're closer to the defensive side. So it's really up to your risk profile. I think all these things have a place in investors' portfolios in some form or fashion. I would never recommend someone go all into one thing or the other. It's really about assessing what risks you're willing to accept and what returns you're looking for.
Now that we're, talking about cryptocurrency, at what prices do you see Bitcoin and Ethereum rallying to?
So the thing about cryptocurrencies is that they're actually very highly correlated with risk assets like stocks in general. So they tend to move in unison. I'm not an expert on cryptocurrency by any means, but just looking at risk, as a macro investor myself, I see these things hitting all-time highs probably as soon as the fourth quarter, if not, latest by the first quarter of next year. So, I'm very bullish risk assets in general.
Right. The current rise of renewable energy investments has been remarkable, especially in Southeast Asia. Will, how do you see this playing out here in the Philippines? And do you think renewable energy could continue to be a key focus for new market entrants or IPOs in 2025?
So actually, renewable energy has really been one of the sort of hallmarks of the PSE, largely because of very favorable regulations, coupled with a very voracious appetite from both local and foreign investors to invest in renewable energy. And that has really led to renewable energy stocks being everywhere in the PSE. You have very large blue chips like AC Energy. You even have renewable energy REITs. You have small caps, you have mid caps. They're really, abundant in the PSE. And I think that was a very deliberate effort by the exchange. Of course, like all things, there are going to be winners and losers in this segment. But as far as, whether there will be even more listings, I certainly think so. The exchange has done a very good job in making listings for renewable energy companies easier. And that should really propel the number of names that we have on the bourse. And I think couple that with really the incredible appetite to invest in in renewable energy. I'm very bullish that sector broadly.
Thank you, Will. We need to take a quick break for some reminders. We'll be back with Will Cabangon of AAA Equities in a moment. Stay with us on Follow the Money right here on BNC.
This is Pinky Webb, and it's a great opportunity.
Ang inyong lingkod si Corina Sanchez Rojas.
Corina Sanchez.
As they uphold their mission
Is to be proud
Dalawang
of what we do
mamamahayag
with
na
our
subok
lives.
sa
Ito ako
tapang
ay
at
ating
talino.
chance to talk with all of you. Maraming salamat.
Pagsasamahin ng isa. Agenda. Mondays to Fridays, 6 p.m. Only on BNC, the Bilyonaryo News Channel.
Welcome back. This is Follow the Money, and we are still speaking with Will Cabangon of AAA Equities. Will, let's continue with the conversation, yes? In recent years, the Philippines' real estate market has been resilient, but with some volatility. What is your outlook for real estate stocks in the coming year, and how should investors position themselves?
So I have a very mixed view on Philippine real estate stocks. Among the things that I'm very optimistic on, so let's start with the good stuff. I think there's very bright spots in low-income housing. So developers, that deal with Pag-ibig, for example, but also very bright spots in provincial real estate. People who are developing outside of Metro Manila. I think those two, in my view, are some of the highest potential areas of real estate that I think the developers who focus on would do well. But on the other hand, a pocket of real estate that I'm not so bullish on is sort of your traditional commercial office developers. I think that sector is really just being hit from both sides. from a supply and demand perspective. On the supply side, I think, there's just been years of overbuilding that will keep that will overhang on that sector. But on the demand side, you have the POGO exodus, you have BPO sort of working from home, and those two factors I think are really limiting for your traditional office sector, as well as your middle income residential. I think those are two segments of the real estate market that I would generally steer clear from.
Now, Will, as an investor and leader in the financial sector, what has been your most challenging moment this year? And how did you handle the risks and rewards that came with navigating the uncertainties of 2024?
Without sounding perhaps too much like a beauty pageant contestant, I think the difficult part of this year, and really every year, is that, one of the simple facts of investing is that optimists tend to make more money than pessimists. And that's just a fact in investing. It's a fact in business. You need to have a belief of a brighter future to be able to make money. But there is a line that has to be drawn between being optimistic and sort of being blindly naive. And sometimes, you can be very optimistic about an investment, but when it starts going the wrong way, it's hard to hold that resolve, to hold that investment, and to really believe that all the research that you've done remains correct. So I think balancing those two things as an investor is very difficult, and I think one of the challenges that not just myself, but I think all investors face when they get into this type of business.
Well, now that we are talking about uncertainties, Will, elections are coming up next year. What impact do you think this might have on the market given the current landscape?
So, I think this is a pretty unpopular opinion, but I think generally speaking, people overestimate the impact of elections on asset prices. I think when investors assess the impact of an election, for example, I think the most important outcome there is that it is a sort of uncontested, uncontroversial outcome. You don't want an election where, and this really more applies to a presidential election, but you don't want one where it's a close race and the outcome is contested, and that causes all kinds of sort of social strife. That's not what you want. But for like a midterm election that we're about to see, I don't really see that affecting our market much, if at all.
There's another question that I wanted to ask, Will. There is a growing interest for global investing, specifically in tech funds, Meta, Amazon. Is this something that you would actually encourage at this point?
I think that has a place for people who are looking for to invest passively. Obviously, when you're investing in funds, you're sort of delegating the investing task to somebody else. My personal view is that when you're dealing with your life savings, when you're dealing with your nest egg, I think that's too important to delegate to someone else. I think you can delegate cleaning your house to someone else, you can delegate washing your car to someone else, but as far as dealing with your nest egg, with your life savings, no one knows better than you do, and no one is more incentivized to look after that money than you are. So, while it is convenient to sort of delegate the investing portion to someone else who can go invest in these different companies, I do encourage everyone, because it really is a life skill, learning how to invest, to take the time and learn and do this for yourself, because really no one else is better at handling it than you are.
Right. For the new investors that are watching the show right now, what do you think is the best entry point for a newbie wanting to invest globally?
So, the beauty about being a new investor in this day and age, but I guess it's also a double-edged sword, is that there's just so much information out there. And I say it's a double-edged sword because on the one hand, you have so much free and informative information that's incredibly helpful, but you also have a lot of junk out there. Junk that I think could even hurt you in the long run when you learn the wrong thing too early. What I recommend is for people to get online, get on YouTube. You can even go on ChatGPT if you want, and really learn from the absolute best in the business. People like Warren Buffett, people like Stan Druckenmiller, George Soros, Paul Tudor Jones. These are the names of people whose lessons in investing have been tried and tested by all the greats throughout history. I think solidifying your basics from these guys, you can't really go wrong. And then from there, you can sort of develop a sense for what's good information and what's bad. Because I think when you're starting out, it's very hard to differentiate what good information from bad.
Lastly, Will, if you had to give advice to new investors just starting out, what would you tell them about staying resilient during unpredictable markets? How can they balance emotional and rational decision making?
So, this is something that we all struggle with. And I think it's easy to say that investors should hold strong when they are confident in an investment, but sometimes that confidence can be misplaced. So I think for a newbie investor, the most important thing you can do when approaching investments is to take a very rules-based approach. And what I mean is, whenever you assess an investment, you create a sort of exit strategy for yourself. You have an idea in mind of how long you want to hold this, of how much downside you're willing to tolerate, and what your upside target is. Because oftentimes, especially among beginners, people put a lot of thought about when to buy something, but almost no thought into when to sell it. And I think selling is actually the more important and more difficult part of investing than buying is, because you can buy it once. But there's a million other possibilities. There's a million other prices where you can sell it. So that's my biggest piece of advice, is to have a plan.
We learned so much this morning. Will, thank you for sharing your insights with us today.
Thank you very much for having me on the show.
As William Matthew Cabangon of AAA Equities highlighted, the investment landscape of 2024 and beyond is filled with both opportunities and risks. The rise of tech startups, renewable energy, and ESG investments all present exciting prospects, while traditional assets like real estate and equities continue to offer stability. Investors must balance innovation with caution, navigating the unpredictable waters with a combination of data-driven strategies and emotional resilience. Now, before we go, we leave you with this thought from American investor and co-CIO of the world's largest hedge fund, Bridgewater Associates, Ray Dalio. Do not focus on short-term gains. The goal is long-term wealth creation. And that's it for today's Follow the Money. I'm Anne Asis-Carilo, sitting in for Rain Musmi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.
Welcome to Pathways to Success, a program that supports micro, small, and medium enterprises. I'm Mai Rodriguez.
We are giving spotlight with this innovative business enterprises that shares growth in our community. We support giving these entrepreneurs a chance to fuel their business and be known in the market. Take a look inside their stories, challenges, and success.
The more you learn, the more you earn. For more inspiring stories here on Pathways to Success, here on